Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy, and we're going to talk about chart patterns, technical analysis on Apple. The sneaky snake trading strategy is based on chart patterns, moving averages, and being in the now. So let's go ahead and get right into it. Apple. Apple iPhone. What a surprise. It wasn't much of a surprise to me, but it shook a lot of heads on CNBC as their pump didn't last too long. They were pumping the heck out of Apple, and they wanted it to break the all-time high. It did a little bit, but it definitely pulled back on bad news. Why were they pumping this stock on losing sales? I have no idea. But it already had a wonderful run to a double top, and that was good enough for me. I talk about double tops, how important it is to recognize them, same as a triple top for exit ideas, and let them suckers pull back some. But it pulled back a lot because of downgrades, and then it got antitrust lawsuit against it. So I mean, he got hit with three whammies last week, and it just brought the stock down about $18. So let's go ahead and look at some of the news here. I like to get a little gander of what's in the headlines recently, and so on and so forth. So we got, is Apple a buy, sell, or a hold? People are questioning it. If you're a technical analyzer like I am, you'd say maybe we could be able to scalp this and day trade it from the levels that we are right now. And if not, we're going to pull back pretty good. Out of cloud storage, these are the options, so don't overpay. Apple supplier Foxconn sees revenue decline in the first quarter of 2024. That's not good news. Apple reigns the world as the most valuable stock. Is it in jeopardy in 2024? I'd say so. Can Microsoft stock stay significant in 2024? Can it outpace Apple? I'm not sure about that either. They both are lagging indicators to me when it comes to the market. But they put a lot of clout on Apple, and I think they put too much clout on Apple. For one, it depends too much on the Chinese government, and when politicians are involved, it's not that good. So, politics and Apple, not good. Antitrust, then you had the iPad, or the Apple Watch ban, and then something to do with the iPad too, and then also this here antitrust investigation out of New York, or NYT, whatever that is. U.S. government nears the Apple antitrust investigation. So nothing in there is good to me. Nothing. And I've tried to make that a point. If I could get on CNBC, I'd say, what the heck are you pumping this Apple for? We're at an all-time high, and you want... And then they come out the week later, after the new first day of trading, all of a sudden it gets hit with the bad news, and they're just like their jaws drop. This was their baby. They wanted Apple to lead the market. And if Apple would have led the market, in their opinion, which I think they've overanalyzed the whole situation, that for one, hedge fund managers and everybody was wrong about the market. They were wrong about it in 2021, they were wrong in 2022, and especially 2023. The Feds were behind the curve. That's another bad thing. So they were relying on the Fed to give them market compassion on which way the market's going to go. Once the Fed said he's going to stop raising rates, then all of a sudden the market, in their opinion, which I do not believe, I don't believe the market dictates on the way you should trade. I believe that you need to follow the charts. The charts will tell you where to go, where to get out, where to get in. The market is a lagging indicator, although they try to call it a prediction indicator. Well, the market's up, so we're going to have a good year. And greed is involved in this. I will never believe anybody that tells me that the market can predict the future. I disagree with that 100%. I've seen it all. I've been here 20 years, and I've watched these analysts do the same thing year after year, and they're almost always wrong. So if you go by the charts and the technical indicators and the headlines, that can lead your way. You don't need to know a lot of stuff about the fundamentals, in my opinion. Just read the news. I just read headlines. I don't even go take my time and fumble and read and read and read. It's just a waste of time to me, because my technical analysis is much better than reading someone's opinion about what the stock's going to do or where's it going. Sometimes they're not right anyway. So let's go straight to the chart. So you understand that I'm bearish on Apple. But this is the part that I want to talk about. This is the weekly time frame on Apple, and we'd had a double top in the year of 2023. So I told the room, I said, no, anything that's a double top right now, we want to be patient and cautious. We don't want to take these pumps that are coming out from CNBC. Just read the technical analysis, and the chart tells you that we are at a hard resistance and that we're going to pull back. And that's exactly what we did. We pulled back to a major support level, and I'm going to show it to you on the yearly time frame. Now, also, we're going to go ahead and get rid of this, and I'm going to draw a trend line. Let me see if this will work. Yep, right there. You see the body of this candle right here? We're going to draw a price line, 181.33. Look where that candle stopped. A little bit below that. There's that 181.33 right there. So now we're bearish for sure, as we broke down below that candle. Let me bring this back to the yearly, and I'll show you the two patterns in here where I think we could be at a scalping and only day trade maybe, unless we start. And we got a new week. We got a whole new week started. We got earnings coming out. I think the banks are going to be good this year. So be watching the banks on Friday. And maybe there'll be some runs into the earnings and then sell on the news. But we've got two reasons that this looks attractive to me right now. Fact one, well, actually three. Fact one, we pulled back to a real critical pivot point area on the chart. This is definitely a strong pivot point. Fact two, we hit the 200 SMA. Fact three is we hit a shoulder line on an inverse head and shoulders. Your left shoulder, and then we got the right shoulder right at the 200 SMA. So you got three reasons that we are at a solid support, and we could get a technical bounce on this for a day trade or a scalp. Now the resistance to break, we're going to look at that, and that's going to be right here. It's not much of a move. It's only up. The move to break resistance is going to be the body of this here spinning top. So we're going to draw a price line on that body. Somewhere right around 182.13, 182, maybe a little bit higher than 182. And if that breaks, we'll hit the top of this wick, and then we'll hit the top of that body, bottom of that body right there, right in that body. We're going to go a little bit below it on that bottom trend line, right around 184. So you could get a $3 bounce off this coming week, and maybe run up to the 51 or to the 65 EMA. That's the 51 and the 65. There's your 50 SMA right there. So it's right in the middle, sandwiched. So all three of these are a real strong indicator that we could continue the run into the end of the week to 186, but no higher. Now they might pile on this because they recognize that 200 SMA as a buy indicator. If we go below it, it'll be a whole different story. So right now it's got to hold that support. And if it does not hold that trend line or that inverse head and shoulders, we could drop down here to 176 and hit this 50 SMA. And that's on the weekly time frame. And again, that's around 175, 176 in that area, if we do not hold that 200 SMA on the daily time frame. So I want to run through this one more time. We've got three indicators as a buy signal. We've got the 200 SMA. We've got the shoulder line of the two-headed snake, which is an inverse head and shoulders. And we've got the pivot point area that's really strong. They like to hold that pivot point, run up a little bit, and then pull back. So if we pull up the 20-day 1 hour, it's had a real nice little sell-off in what, how many weeks? 1, 2, 3, 4. These suckers were pumping this stock in a downtrend. It's just furious. I mean, I was really tearing them up. I said, stop pumping Apple. So the moving average would be the 65 to break. I like to take it to the 50, 50 SMA, 51 EMA, or the 65. If either of them all break, you could run it up to the 200. That is if we do not stop at 184.13. It's had a real good drop last week. I traded it. I did well. I'm just going to be cool, laid back, and watch and see if it starts to reverse to the upside. That's Apple. My sentiment on the Apple is 40% bullish and 60% bearish. But with the three underlying indicators of the head and shoulders, the pivot point, and the 200 SMA, I have to look at it Monday and try to day trade it and scalp it to the upside. But I will not swing it until it breaks my resistance level. And again, if you pull up the 20-day, 1 hour time frame, that resistance will probably be the 50 SMA. And then I might just go ahead and hold on to it and see if we can bust past this here channel right here and run it up to the 200 long. But we're just going to day trade it and scalp it. This is the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now.